Hello and welcome to the social trading webinar with me, David Jones, in association with Ayondo Markets. If you're watching the recorded version of this, it was held live on the 31st of January 2017 at 7:30 in the evening. This should only run for about 30 minutes tonight. To find out more about social trading, you can go to my website, tradeafter.com. And for general market stuff, you can follow me on Twitter. My Twitter address is @JonesTheMarkets. And this evening, what we're going to do is just look through some traders who you can follow, because the idea behind social trading is easy enough. I think if you've ever tried trading yourself, you know how difficult it can be to be consistently profitable. And the idea behind social trading is that you find traders who are profitable, follow them, and have their trades automatically copied on your account. So we'll look at some real traders tonight and we'll follow them on a real account so you can see how it all works. I think that's the risk warning up for long enough. So first of all, before we get going, just a quick word from our sponsors. So Ayondo are running a social trading championship. So if you quite fancy yourself as a top trader who people might want to follow, then you might want to investigate this social trading championship through under this competition they're running. So you get commissions for people who follow you, but also the chance for the winner to win up to $250,000. So to find out more, if you go to the website next-trading-star.com, all the information is there. Okay, let's go back to tonight. So what we're going to do, we're going to start off by actually looking at some top traders. And for those of you who are here live, I'm going to send you this link now. And if you click on this link, you'll be able to see the same thing that I'm seeing and sort of have a little play around with it. But what we're going to do, the idea behind social trading is easy enough. We're trying to find traders who are consistently profitable, who fit our own risk profile and have their trades mimicked on our own account. So rather than trying to be, if we use a footballing analogy, the star striker, we're trying to be a good football manager and pick a strong team and follow them on our account. It's been an odd couple of months. I think we've been doing these webinars since the summer, and there were some strong, consistent month-on-month, quarter-on-quarter performers. But I think plenty of people seem to have been wrong-footed by what happened. Well, first of all, there was maybe the shock that Mr. Trump got in and won the election, the presidential election in November, but also the market reaction since then, because of course the markets just took off like a rocket, and they're up, I don't know, is it 10%? I think since those presidential lows, the overnight lows. So I think plenty of people were maybe shorting into that rise. So a few former star traders have been caught on the hop, but we'll have a look at some of those as we go through this webinar. But what I'm looking at here, and I've sent you the link, if you're watching the recorded version, if you go to bit.ly, that's bit.ly, then / AY top trader. I think I've sent the wrong link to people here. Hold on a second. Let me sort that out. So it's bit.ly / AY top trader if you're watching the recording, and I'll just send that out to everybody who's here so they can see this and play around with it if they want to. Hang on a sec. There we go. That should go through now. Perfect. So what I'm looking at here, with Ayondo, you can trade with Ayondo in the normal way. So you can open up an account and do self-directed trading, where you're making your own decisions as to what to buy and sell, where to buy and sell it, all the usual stuff. But what you can also do, or what certain people do, is make available their track records on Ayondo. So their trading history, as it were. So you can see how well or maybe how badly they've done, and if you want to, you can mimic their trades in the future on your own account. So what I've done here, I have sorted these by best performers over the last 12 months. So you can see here in the time period, 1 year, risk score all, RMT. I've actually filtered out a lot of traders here. So RMT means real money trader. So if you want to, you can trade with ayondo on a demo account and make your track record available. If we just unclick that, let's see how many extra we end up with. So we end up with 801 traders. But if I flip that down to just real money, I've got 218 traders potentially to follow. So these are people who've built up their track records trading with real money. And my view is, if I'm going to risk my real money following you, then I want these people to have been trading with their own real money. I want them to have the courage of their own convictions. So we can see number one at the top, he's come off the boil a little bit in recent months by the look of it, but over the last 12 months, Hectorius, there's a career they can move through with ayondo, which is dependent on how many trades they do, their returns, how much of their profit they give back. So he's moved quite along that career path. The P&L, the profit over the last 6 months, just over 100%, which is a cracking rate of return. The drawdown, this is a really important figure. I'd argue this is more important than the overall profit. If you went hell for leather and took massive risks, you could double your account or blow it up. The trick, of course, is along the way not to give up too much profit in the gain of future profits. And this is the drawdown. This is how much it drops back from their sort of profit peak. So Hectorius gives back along the way around about just under 20% of profits initially. If we scroll down to this one here, number 4, Trade Goat. So Trade Goat's return last year, just under 90% return, which again is a great rate of return. But along the way, gave up almost 90% of profits, and you can see it here reflected in the chart P&L. Had a dreadful start and has just started clawing it back. Yeah, so the drawdown figure for me is a really, really important one. If we just have a look down, just one more on the drawdown, the 7th best performer over the last 12 months, Janhe, return of 56%, again, very respectable return, but has only given back 9% of profits along the way, and you can see the very gentle P&L chart there. So that drawdown figure for me is a really important one. Last, that refers to when their last trade was done, so we want to make sure they're reasonably active traders. Trades per month, 134 trades. A lot of these guys and women are pretty active traders, quite short-term traders. Number of followers, how popular they are. And again, the other important thing for me is the charts, because what I want is not a chart like this one, who's actually the 4th best performer over the last 12 months, but someone whose chart has got a relatively smooth P&L. Hopefully someone, if they're not profitable month on month, they're profitable quarter on quarter, their overall account is in an uptrend, and they're not giving away too much profit along the way. So that's really very much like a top-down view, a league table of who's done the best. So to find out more, let's click on OMP trading, because OMP trading was a star last year, but I think has got quite a bit wrong-footed, I think it's fair to say, in the markets the last couple of months. So let's click on OMP and we can find out a lot more about him or her. So it brings up a more detailed P&L. So there's OMP. So the performance over the last year, looks like OMP's only been live on here since May of this year. So the OMP performance, it started back here, May the 19th, and peaked. Looks like peak P&L was beginning of December. So up 156% in under 7 months. Again, fantastic return. But you can see where it all started to go wrong during December, ended up giving back a whole chunk of that profit. Don't get me wrong, that's still a very good return. This trader is still up 95% since the start, since they started trading, but gave back a whole chunk of profits during December. So maybe got wrong-footed by the ongoing strength that we saw in the likes of the US stock market indices, the FTSE and the German DAX. But we can see, still a popular one, 1,329 followers. Down here is the performance versus the DAX. So the DAX over the same period up, what's that, about 20%? So you can see outperformed the DAX. The statistics down here, volatility, how volatile have the returns been? I think that's relatively low. Number of trades over the period. Percentage of winning trades, I think that's pretty healthy. You do see some people on here who have a winning trade rate of about 90-odd%, which is just unsustainable. And it's one of the concerns I have is if I see figures like that, someone who is making, who's right more than 90% of the time, it does suggest that maybe it's a trader who's got a problem taking losses. And I'm sure we all know that's an approach that might work for a little bit, but over the long run, it isn't one really to be recommended. So right about 2/3 of the time, just under 2/3 of the time. Winning months, so 77% of months are winners. Maximum drawdown 24%, and it looks to be all during December. This is a trader that I follow. I've got a couple of accounts with ayondo. I've got an account I use for demos that I'm using for this, and I've got like a real money account. And OMP trading is one of the ones I followed since the summer. So again, gave back, still up, but gave sort of a chunk of profit given back. But that's how it goes, isn't it? And I don't think everyone is going to make money month on month. But maximum drawdown, it's quite a chunky one, and all through December of around about a quarter of the account. Then we can scroll down and see a bit more information. How has the money been made? And you can see up until December a cracking return. Up 12%, 7%, 11, 23, 15, 23, 5, and then down 19%. And I would just caution. I think when you start seeing double-digit percentage returns month on month, it's a great return to get. But again, I think we have to be realistic. If you're getting 10% returns a month, you are probably taking on a significant level of risk. Don't think that, oh wow, this trader has discovered the holy grail. So I'd say, still follow people, but maybe balance them off with people who have perhaps a somewhat lower risk approach to the markets. And you can see the big hit there in December, still up 100% for the year, and has had something of a bumpy start to this year. Nothing too drastic, but down just under 2.5% OMP. So still maybe struggling to get back in the groove. So down a little bit for the start of the year. Then if you scroll down a bit further, you can see, well, where are the trades done? So you can see the bulk of the trades, 60% of trades have been done on the German 30, so the DAX, and then 32% done on the Wall Street market, the Dow. So more than 90% of these trades are on the major indices. There's a few other bits and pieces as well, but clearly this is where OMP focuses. And if you scroll down, you can see some further data, any positions that are running, any closed positions. Okay, so you can see a couple of recent losses, a couple of recent winners, and so it goes on. So you can scroll down and get a good picture of how this trader trades. Now, let's say I thought, well, actually, I can see that OMP trading had something of a disastrous December, but I've still got faith that his strategy is right. He or she got wrong-footed by the strength. I think like plenty of people did in the markets, and I'm expecting OMP to make a comeback. So what I can do, I can choose to follow them. So let's set this up. So I'm logged in here with one of my accounts. I think it's got about 400 quid in it. If I click on follow, what this does now, this adds OMP. There's the trader. So adds OMP to my portfolio. So in the best spirits of Blue Peter, here's some I prepared earlier. So there are 4 others in there already that I'm following, but there's OMP added in, and I can follow a maximum of up to 5 people. So let's just take a step back. So what we're looking at here, it gives me a chart. So this is the idealized performance over the last 12 months. So if I could go back in time a year and follow these 5 people over the last year, I'd have made just over 100% return over the last 12 months. Isn't that fantastic? But unfortunately, of course, we can't go back in time and follow these people. We're just, hopefully, they're going to carry on replicating this performance. I can see how it would have been over the last 3 months. I would have lost money over the last 3 months, down 3%. Over the last 6 months, I'd have made just under 30% over the last 6 months. So I can get a feel over all these different time frames how profitable or not that approach would have been for me. So at the moment, this is a portfolio setup. So I haven't actually started given these people permission yet for their trades to be copied on my account, because there are a few other bits and pieces we can do. Let's go to OMP. So we click on settings. So what you can do, and again, this is a really important step, you can dial in the level of risk that you feel comfortable with. Now, first of all, if I'm following a trader and they do a trade whereby they risk losing 2% of their account, let's say their stop loss means they'd lose 2%. Let's say their account is, I don't know, 30,000 euros and mine is £2,000. Then if I'm following that trader, that trade is copied on my account for the same percentage risk. So a 2% loss to them would mean a 2% loss to me. But that risk actually gets diluted. The more traders you follow, the risk gets diluted. And I think it does explain it in here. If you follow several traders, then your risk is distributed evenly amongst all of the traders. So with 5 in my portfolio, I'm actually risking a fifth of their size on every trade they do. So if someone is risking losing 2%, I'm risking a fifth of that. So what's that? 0.4% will be the risk on my account. But I can change that by dialing in more or less risk using this button here. So if I dial that down to 0.5, it means I'm trading half the size that OMP is going to trade, or half the risk that OMP is going to trade. But because I'm following 4 other people anyway, it's even less. So if I want to follow, if OMP risks losing 2% and I want to risk losing 2%, I need to dial that up to 5, if that makes sense, because I'm following 4 other traders. The risk is dialed down already. But basically, I can make the risk whatever I want it to be. If I only had OMP that I was following and chose 10 times, then every trade he does in percentage terms gets magnified 10 times on my account. I wouldn't suggest that's a sensible strategy if you're just following one trader. But for me, if I make it 5, it means if OMP risks 2%, I risk 2% as well. And I can set this, for all the different traders on the account, I can set the levels of risk that I'm comfortable with. If I think someone has maybe gone off the boil a little bit, I can dial in different levels of risk as appropriate. So hopefully that makes sense. And I think, again, in the beginning, I think the best way to learn about this stuff is to do it, but dial in a really low level of risk so you get a feel for how it works. Because I've traded using spread betting for probably nearly 20 years now, and it is odd in the beginning to have an account where trades are going through that are nothing to do with you. It's quite strange, I think, when you're used to placing trades yourself to see them going through. But once it's up and running, it's just a question if you can check it online in a browser like this to see how things are going. And I might check in every couple of days just to make sure everything's going smoothly and adjust anything if required. But I try not to adjust anything apart from on a monthly basis, to sit down every month and see how people have done, see if someone's going off the boil, see if they need maybe dialing down the risk a bit. But now this is all set up, so I've got these 5 people I'm going to follow. OMP is the one we just added. If I click on execute on live account, another warning comes up and it says, okay, you've got the option to execute any trades that they've got open. But I don't want to do that. I want to execute any trades they do in the future. So I don't want to replicate trades they've got running now, because if someone bought the Dow yesterday and it's currently 50 points higher now than it was yesterday, the trade will get done 50 points higher, and I can't get any yesterday's price. So I've got no interest in following any open positions, just new positions. That's it. So click on execute portfolio, and that's it. So one trade, I think, has just been done, but and a massive loss of a penny so far. So I've got my account with 432 quid in. I'm running a loss of a penny at the moment. What I can also do, you can put a stop loss on the account. I think the minimum size account to start following somebody with is £1,000. But what I can also do, if I click on there, I can set in what is in effect a stop loss on my account. So I've got 432 quid in my account, and I can say, okay, if my account balance, including open positions, falls to 275 quid, for example, please close all the positions and don't execute any new trades. So it's a way, if you had £1,000, £5,000 account, whatever it is, but you want to set an absolute level of risk, you can set that up from this from this settings button here, and that's it. My account is now up and running. So all I do is I can check on this page every day, see what trades are going. I can flip back and have a look at my portfolio, see if anybody started doing really badly or doing really well. I maybe want to put the risk up a little bit, and scroll down and see any open positions that are running on my account. I first did this, I think when you first start, once you open an account, you have the option to run a demo account for about 28 days, I think it is. And I did that. I first started with all this back in April last year. And in a month, my demo account made 15%, but I was taking on ridiculous levels of risk. The balance really was swinging around. So since I've been doing it more with real money, I take definitely a much more risk-averse way of doing it, because it's like all trading, isn't it? If you take on big levels of risk, you've got the chance for big rewards, but you've got the chance for having some chunky losses along the way. So for me, what I'm looking for is not to replace the stuff I do myself, but to try and hopefully, have maybe a smoother and a more diluted approach to the market. So I think it's quite complementary. If you're trading yourself, it's quite complementary way of trading. And if you're someone who maybe for whom trading is new, it's quite an interesting way to gain some exposure to the markets. So to the filters, I think that link I've sent you, the filters that I think are important. I mentioned some of the filters. So some of the things I look for, real money traders is an important one. You can follow people who are trading on demo accounts if you want to. But me, I want to see them having some actual confidence in what they're doing with money. A smooth historical P&L. That chart to me is very important. Let's just flip back to the screen. My background is technical analysis. So for me, I am looking for nice trends like this. There's one. This Edelmetall has been a consistent, strong performer. Again, another one who's maybe seems to have suffered the last couple of months. But I'm looking for a nice, smooth, historical P&L, not something like this. That just makes me want to run a mile. Maybe in a few more months we'll see more of established trends here. But for me, I want to see a nice overall smooth P&L. And it is hard. I think it's much harder now, I think, after maybe what markets have done over the last couple of months, to find that. Those traders are still out there, but I think we maybe need to see. I think in a few months' time we'll have a much wider choice of sort of smooth historical profit and loss charts of people to potentially follow. A couple of other things: healthy P&L drawdown ratio. I've got no interest in following a trader who made 100% last year, but along the way lost 90% of the money before bouncing back. I can get enough volatility like that from my own trading. I just want to have hopefully a nice, healthy profit versus drawdown. Low volatility, ideally. We don't want to be sitting there logging in and seeing our account swing around by 10% every day. So again, to try and smooth out some of the noise in the market. And the detailed search, there are other things you can do, but a detailed search lets you refine all of that. So if I flip back to the trading screen, and you can do it, of course, over any sort of time period. I've chosen 12 months here to try and get a big picture view. If we made it the last month, I think we'd have a very different view. Here we go. We've got a whole different bunch of traders here. So the best performer over the last month, real money, AOT 15, has made a 29% return. That's a great return, but look at the drawdown, 66%. So for me, that drawdown to return ratio is completely the wrong way around, and you can see it in the chart. You can see Future Invest, another one here, great, grew their account by a quarter, which is great over a sort of a 30-day period, but again, you can see the drawdown pretty chunky along the way. This is a bit more sensible. Climb's maybe an interesting one to keep an eye on for the future. So Climb, great name. P&L over the last month, 23.5%, drawdown of 13%, and you can see for me that's a much healthier looking chart. It looks to be a new person, this Climb. It's only got 5 followers. Let's click and find out a bit more. Maybe they're a fairly recent register. Oh, here we go. Only started, you can see it here. Only started real money trading in January 2017. So it's only been going for a couple of weeks. So again, for me, not enough of a track record to maybe start following. I suppose you could start following from a very low risk point of view, but maybe it's one, if he or she can keep this performance up, probably not 25% a month, but one who will crop up on future webinars. And really that's it. It's as straightforward as that. The way to look at it, I think, if you're trading at the moment, is complementary to your own trading, a way of gaining some exposure to markets and maybe smoothing out the volatility. And it's you trying to be like a fund manager almost, or picking top traders rather than trying to find the trades yourself. So trying to find these traders who have consistently profitable strategies, maybe not month on month but quarter on quarter, who don't end up giving back too much of the profit along the way. I think that you will inevitably end up giving profit back along the way, because not every trade is going to be a winner, but we don't want to give back too much along the way. And hopefully it's a way, an alternative way of trying to make some steady money out of the markets. And that's it. To find out more, I've written a bit. I'm going to write a bit more over the next few days. But if you go to my website, tradeafter.com, I've written a little bit about my experience with social trading. If you've got any questions, drop me an email. My email address is david@tradeafter.com. And if you can follow me on Twitter for market updates and stuff like that, I'm at Jones the Market. So I do this webinar with ayondo probably a couple of times a month. We do this one, but every Wednesday lunchtime I do a market webinar. So that's looking at the actual opportunities for ourselves in the markets, indices, currencies, and commodities. So the next one is Wednesday lunchtime at 12:30. So you can register for that or watch the recording. And then someone saying, did you do sectors forecasting some time ago? No, that wasn't me. That wasn't me. Oh, someone else is saying, how do they make money? That's a good question. If you follow somebody, what they get paid is in effect a commission. So if you're following somebody, if you've got an account set up to follow people, the spread that you pay will be slightly wider. So maybe, I don't know, a couple of points wider than if you were trading for yourself. So that wider spread, the person you're following will get some of that in commission. So if you were trading for yourself, you wouldn't trade on your following account. You could set up another account. When you open an account with ayondo, you can set up both accounts. So you have an account for following people and an account for trading for yourself, which has got normal market spreads. So the following account has slightly wider spreads. But again, for me, it's not something I'm bothered about, because for me, I don't begrudge them a commission if they're going to turn me a decent profit, and I don't mind paying the wider spreads if it's going to be an alternative way of making some profit from the market. So that's how they make money. But like I say, if you go to the ayondo website, you can register on the website, register for a demo account. You can have a look at all these rankings, see how people perform, set up dummy portfolios, and see how they do. But I genuinely think it is an interesting way in a business where we know that most people lose. The FCA came out last month, didn't they, when they were talking about spread betting and CFDs, and they found it was 82% of people lose. I worked in the spread betting and CFD industry for the last 10 years, and it's not a massive surprise to me. The reality is, in short-term trading, most people lose, and I think the whole social/copy trading is an interesting way of maybe trying to tilt those odds slightly in your favor and getting exposed to the markets, but keeping the risk at a relatively low level. But that's it from me for tonight. So any questions, feel free, drop me an email. I'm doing that webinar tomorrow where we look at the markets. A lot's gone on today. The dollar has had a bit of a nosedive today based on, was it Mr. Trump's trade advisor claiming that Germany was benefiting massively from an artificially low euro. So we've seen some big moves in the US dollar today. So there's a lot to talk about. So, but we'll wrap things up there. Back tomorrow at 12:30. I hope you found it useful. Any questions, let me know, and enjoy the rest of your evening.